Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Hope all is good and everybody's good out there. We got a new Inflation Reduction Act, so inflation going down. Yeah? How you like that? Finally, man, let's go. Let's pass a bill. I'm not quite sure how inflation's going to go down yet. I think all of us are thinking that, but nonetheless, supposedly we've got inflation going lower, so I'm happy to hear that because things are ridiculously expensive. We are financial advisors, and so we like to watch things that are expensive and see what clients can and can't afford. And a quick question before I get started, and somebody's going to post like the class starts at 2 minutes or whatever. That's fine. What if your advisor could watch every one of your dollars and literally tell you, hey, I see what's going on there. I see what you're doing over there. Oh, you bought some insurance, did you? Okay, you didn't buy enough. Like, would that be cool? This is a question for a comment. I'm not like trying to solicit anything, but we're thinking about this. What if we could tell you that your business is burning too much money and here's how you fix it? You are not saving enough specifically for you. You have spent too much this month, right? What if we could watch your personal finances as well? Is that too big brother, or is that pretty unique and interesting there? So thoughts on that one, just overall, instead of being retirement and investment thing, what if we could be your total financial true advisor? Would that matter to you guys, or would that be too weird? Anyways, moving on. Wine and Wealth tomorrow is with Eric. Eric is going to cover, well, he said he's going to cover 4 mistakes that he sees people making in Nest Egg, our retirement planning software. And I said, you can't take my 4, that's my thing, 4 reasons why, 4 things that, so he's going to make it 5. So you're getting a bonus one tomorrow. Last week I did the checklist, retiring soon, what you need to do checklist wise, because we're going to spend the entire month of September going over the nitty gritty with our retirees and those of you very close to retirement, all the geeky stuff. And you know, when I say geeky stuff, I'm not saying like, oh, you know, Roth conversions. No, I'm talking about the geeky stuff. We're going to get deep into that. So hope you'll join us at Jazz Wealth, or at least keep us in mind there. This month, by the way, our FinTips videos on YouTube, we're actually going to be covering sort of setting up for that, right? What things to consider around retirement, little strategies and things that we can really expand on in the month of September with our clients there. Anyways, before we get started, we got a happy birthday in the building. Today, if you don't know Doug, Doug works here. He is the chief of the office. He does all the grown-up stuff so that I don't have to do the grown-up stuff. And it is his birthday. So big happy birthday to Doug. That is him in his famous Superman suit and tie. It's a t-shirt. We don't let him wear suit and ties here. But it is his birthday, so we had a little party in the office, and I want to say happy birthday, of course, to Doug. It is, I believe, a special year, too, for him. Big 6-0, maybe? Anyways, happy birthday, Doug. So everybody give him a quick happy birthday there. Okay, let's go on to the stock market. The S&P. What are we doing? Are we going lower? Higher? Sideways? What's happening from here? Well, let's take a look. We've got the S&P on the screen. I'm going to move over to the SPY. I realize some people like to use this because you can see this on any chart. Not everybody has futures, but look at where we stand here. Technical traders are not only looking at the red line, the 200-day moving average there, but they're also looking at this downtrend. It's a perfect algorithmic downtrend. So people like to look at that. Remember, I will never say that technical trading is the best way to trade. I will say that if you can find multiple areas where technical traders like to use strategies, well, then you know you have participants. Whether you believe in it or not is up to you. But do you believe that the red line, the 200-day moving average, acts as a form of resistance? If you say yes, okay, we got resistance. If you say no, you have to acknowledge that people do believe in that. Do you believe in a downtrend, the upper portion, we call it minor resistance of a downtrend? If you say no, no problem. You have to believe that people do believe in that and will take action. If you believe in it, well, then there you go. You got your resistance, right? So never look at the stock market and say, oh, the stochastic is overbought. Okay, there's a small subsection of participants in the market that do use that. To use it as a end-all, be-all type oscillator, no, that's not going to work for you. But if we could say stochastics overbought, MACD, RSI, all that stuff overbought, the stock market is more than 2 standard deviations away from the 50-day moving average. People like to look at that. It is bumping its head against the 200-day moving average after having a bear market rally that put us into almost a new bull market. It is also trading at the upper range of the downtrend. You put all that together, and now all of a sudden you have a big group of people that are making decisions based on their beliefs. So look at it that way. Don't look at it like you have found the Holy Grail, because it probably doesn't exist. Anyway, so that's where we stand here with the S&P. We're fighting through, or trying to fight through, the 200-day and the top of the downtrend. We also have low volume, and that's normal this week, so that's not odd, the fact that we have incredibly low volume in the stock market. I already told you, it's the 44th most active week in the stock market this week, which means it's not really that active. So totally cool. Everything's behaving as normal. Remember, this has been a quick run, and a rather good one, right? So we've had a really quick run here. We're currently averaging 0.55% a day over the last month. That is not normal. 0.09% is the long-term historical average of the stock market per day. So we got 0.55% here on average there. Also, if we break through the 200-day, we would be above it in less than 2 months from the start of the bear market. That made me think, is that odd? In a bear market, when it starts, is it normal for the S&P to then be back above the 200-day moving average within a month or two? It's actually really, really odd for that to happen. So if we were to break above, it would be only the 4th time in the S&P's entire history since November of 1932. It would be only the 4th time that we've rallied above the 200-day moving average within 2 months of hitting a new bear market. There's throwing a bone for all of you out there that say, this is just a bear market rally. All right, you may be onto something, because this is a rather sharp and quick rally that doesn't normally happen. It is not normal for this to happen, just so you know, right? Only 3 other times in history. Anyways, let me go back over here. I got off on a tangent there, had all these stats in my head, and I was like, wow, let's share it. We've got the energy sector. Really, it's the only sector today that was, it was the only sector that was positive today. We had oil up over 1% for the majority of the day. It finished only up about 0.8% on the day. If you look through, yeah, if you look through the stocks in the energy sector, it's the big names, right? It was basically everything, but it's also the big names today. ExxonMobil, Chevron, you know the ticker symbols here. We're running a little bit slow, it looks like, but no problem. I'm moving fast today. Marathon Petroleum, all of these stocks recovering from the pullback in oil that we've seen over the last couple of weeks. And other than that, when you're looking at the S&P, you really had to drill down to even sub-industries to find areas of strength, meaning more than just one stock that was strong there. For example, in the apparel space, by the way, this is all earnings related. In the apparel space, you got TJ Maxx, Ross Stores, right? All good days for them based on TJ Maxx's earnings. You have to look over at insurers, not banks. Banks won't get you anything. Insurers. You got a new breakout on Progressive. We'll talk about that in a second. Allstate, and as you go through the rest of them, you're going to see it was a good day there. There we go. Come on, man. Perfect. So basically, I'm just showing W.R. Berkley. I'm showing the rest of them that are higher on the day. Notable weakness, semiconductors, right? A little bit of rally on the Chip Stock Act, or the CHIP Act that we passed there. But today, a little bit more weakness. And I don't know if that was due to Analog Devices earnings. I'm going to guess it was. I didn't get a chance to look at it. But it doesn't really matter where you look. If you're looking inside the semiconductors there, it's a bit of a weak day. It doesn't matter who it is. Texas Instruments, go with the big names. They also pulled back there. NVIDIA, I wish I could learn how to type. That'd be good. And Broadcom and such, right? You get the gist of it, right? Look at the SMH. You can see that the semiconductors were weak on the day. In the NASDAQ, down 1% on the day. That's okay. It's extended as well. It really struggled today because of semiconductors and the tech stocks that are out there in the space. Also, Alphabet and Meta and Amazon and Tesla and Adobe, they were all down on the day as well. Some of the bigger weighted stocks there. Now, before we move on, let's try something fun. Think about where the market's at. We always want to be thinking ahead when you're investing. Same thing in business or whatever you're doing. Try to think ahead of your competition. And in this case, your competition is everybody else watching the show, right? So let's pretend that the market does pull back, right? You never have to ask the question, will it or won't it, right? That's why I post the title today, is the stock market going lower? Do you care? Right? If it goes lower, what are you going to do? If it goes higher, what are you going to do? That's what you want to be ready for. Like, we manage now like $250 million. We can't be guessing what we think is going to happen. We have to be ready for one case, ready for the other case. And if we go sideways, maybe we take the day off. I don't know, but that doesn't normally happen. So let's pretend that the market's pulled back. What are you going to do? Where are you going to look? What stocks are you interested in? Well, one of my favorite things to do is look for breakouts, whether they just happened or they're about to happen. Think about this with me for a second. So, for example, Progressive, I just talked about that one. Let's go back there. So Progressive just broke out. Is that a strong stock or is it a weak stock? I mean, a kindergartner could tell you, well, that's stronger than everything else. Great, it just broke out. If the markets pull back, chances are Progressive would pull back a little bit as well. Would you not use that as a buy point or consider it at least? Right? Now, if it erased everything all in one day, you'd say, well, something's horribly wrong. I don't want to buy that. But if it pulls back normally with the stock market, could we not say that without the market's pullback, this would have been a strong stock, right? Could we look at stocks that have yet to break out and say, I'm going to take a little bit more risk here. It looks like it's going to break out. And if you can't even see. And if it pulls back, like Centerpoint here, it hasn't broken out yet. If it pulls back, I'll take a chance that maybe it does break out on the next move up in the market. That could be over the next week. It could take a month. I don't know. But we have a watch list. So now we have Progressive, which you didn't see. I'm sorry about that. Progressive, we're interested in buying that on a pullback with the market resetting and working off some of its overextension there, right? We got Colgate in here as well. It's not the best because it's not breaking to all-time highs, but it's working on a breakout here. Is this something that you could be looking at? So we're playing offense here and saying, if the market pulls back, we already know where we're going to go. We know what we're going to look for. You can do your research fundamentally on any of these stocks if you want. You can look at Howmet as well. I don't have to draw it. You can see it broke out. Markets pull back, it pulls back, maybe the industry pulls back. Okay, great. We have a buy on a pullback on a stock that was otherwise strong, right? So think about it like that. Look, I mean, it's a Hershey maybe? Hershey's the other one, right? A little bit better because it's breaking out to new highs if it does. It's otherwise strong. The market cools off, relaxes a little bit. Maybe we catch the next wave there. If the market continues higher, what do? You enjoy the ride. There's nothing to do if the market is already overextended, which is a real thing, by the way, and then just gets even more extended. You just enjoy the ride and say, well, I have my watch list. I'm ready to go. Maybe you have something like stupid, like a Bed Bath & Beyond. Well, not after hours, apparently, but you saw it today. It took off again, right? Maybe you say, all right, market's extended, stock's extended. There's no good reason for the stock to go higher. I'd take a little bit of profit there and see if I can't do something a little bit later. So it's kind of a lesson of the day because we're not going to have a closing beat tomorrow. So I wanted to give you something just maybe a little bit more interesting for you to take. What do you think about that? Interesting for you? Does that help you? Get you thinking a little bit? That's all I'm trying to do here. All right, stocks in the news. You got Apple. They're going to shift their production of the Mac book and I believe the watch as well from China. They're moving away. They're going towards Vietnam. A little bit cheaper over there. That has been something that's happened in the clothing space as well, but that's Apple's latest news. Meta says, hey, man, we got the midterms coming up. We are not going to allow ads that have to do with politics, social issues, elections, or anything like that in the week leading up to the midterm. Agree or disagree, that's what they decided to do. Pfizer is getting a little bit less business from the government there. I think it was CNBC. I'd like to credit who it was, but I don't remember. Basically, whoever reported it said the government's going to stop buying COVID vaccines and the tests by the end of the year. So that ride looks to be at least over for the moment. We'll move on to monkeypox or something else. TJ Maxx, that's going to be all earnings related there. We're going to expect earnings and revenues. Their guidance was basically in line. I didn't see anything magical here, to be honest. Margins were tighter. I don't have good news for why the stock moved higher, actually. All right. Target's almost the same thing, but it did finish lower. They missed basically across the board, which is not good because Walmart they just said we're doing okay. Target comes out and says, we took a hit with our excess inventories, but we decided to take that hit now to make it a short-term problem rather than a long-term problem. So part of the reason you see the stock lower, they can see that the consumer is still willing to spend, but getting more cautious with their spending. I don't like when there's general comments like that, so I attempt to find ways in the numbers to verify that. You can verify that because of the sales of promotional products there was sky high relative to non-sales products or just normal retail priced products there. So you can verify that one. They were speaking the truth there. Total transactions for them were up 2.7%. Yes, but the ticket price didn't go up. That's not good news. More sales at the same price, a little bit lower actually. It's pretty much flat. But you go, ooh, okay, you're already having problems with margins. That's not a good sign. We want to see more sales with a higher ticket price, or it could even be less sales like Home Depot had, but with a much higher ticket price. Anyways, and the reason for that was because they said money was being, just like Walmart, they said money's being spent on grocery and grocery products and not so much on their higher margin products like electronics and hardline brands and things like that. And by the way, inflation mentioned 72 times in their earnings report. 72 times, man. Yikes. So I think honestly they didn't do too bad considering this. The stock price did all right considering how bad that kind of was. All right, going into tomorrow, we've got BJ Wholesale, we've got Estee Lauder, Kohl's, Tapestry, Applied Materials, Rost, and Steinmart reporting tomorrow if you're interested there. I will pop this thing over here and see if I can answer some of your questions, see what you guys think, and we'll take it from there. Excess inventory while the shelves were empty. Yeah, they didn't cancel orders though, like Walmart did. So they're believing that this is a short-term problem. I don't know. All right, fess up. Who was playing BBBY and got stuck? Right. I think after hours somebody said they're. Oh my gosh, it's down to 1850 somewhere in there. Yeah. Well, there you go. So this whole mess in here, stocks going up on no news at all, just hype and excitement. After hours, somebody large, I didn't catch the name of it. Sorry, I didn't catch who it was. Cowan maybe said, well, all right, if you guys want to buy the stock up to these prices like this, we're gonna sell. And so after hours, you got a big sell comment out there, trading all the way down here now is where it looks like it's gonna start tomorrow. Crazy. That's the ride you're playing, right? Whoever's in it, you know, that's the ride you're playing on a stock that does not deserve a $30 price target or price. Doc says, I ain't messing with that. I don't blame you, man. I don't blame you. Oh, the GameStop, that Cohen. Yeah, I was thinking Cowan for some. Yeah, so I did catch part of that. I didn't read it, so I don't know exactly what's going on there, but I did see the price alert come up. So, yikes. Yikes. Selling the entire state. He's no dummy. Come on. That's like GameStop when their stock took off. They're like, yeah, we're going to sell more stock because it seems like people want to buy it no matter what the price is. As a company, we're going to sell more stock. I would have done the exact same thing. All of you would have done the exact same thing. Yeah. Yeah. Even though it's been weak, do you think Royal Caribbean is still a buy in the overall market pullback? Well, if you're going to play the cruise lines, you got to stick with the largest one. So I don't know, right? I can't say, yeah, that one's better than Carnival. I just think you got to stick with the biggest game out there, which is Carnival. So you may not be attracted to it, but you just don't know what's going to happen. Ooh, 11% was it? Almost 12%. Oh, that'll do it. Yeah, and they probably already sold too. So there you go. You don't have to deal with that. Cisco, I don't know what the question is. What's the question on Cisco? Remember, no closing beat tomorrow. We will be back next week. And yeah, I think that was it. I just wanted to do something different today with the breakout talk. You don't have to do breakouts. You could just find otherwise. You could do Apple, for example. Apple's really strong right now. It's stronger than the market. So if Apple and the markets pull back, maybe that's a buy for you. It's just a way to look at it. So please don't think I was saying that those were the stocks to buy. I was trying to give some examples there. That'll keep me out of trouble. You bought SoFi. Oh, you're going for it. Okay. So you're loading up on that one a little bit more. I believe you already had it. So 688, you got it right at the low, right at the close there. All right. I don't have a good reason to tell you this is moving higher. I'm a counter trend guy, so I like the idea of trying for something special here. It's a long-term hold. SoFi is making a major transition. So this is not going to be some kind of event that causes it to go back to 15, 16 bucks. This is going to take some time, but, I don't like the idea of buying a stock that's not showing you any love, right? Can't hold a rally, you know? It makes it a little tough. Yeah. All right, I'll wrap it up there. I have got, did I cover all the earnings? Just last check of the list here. Yeah. Cool. All right. Good enough for me, good enough for you. Where'd you go? Over here? All right, have a great rest of your day. And remember, we won't be here tomorrow, so don't be shocked when you don't see this pretty face show up at 5 o'clock. We'll be back next week. I hope you have a great rest of your week and a great weekend, and enjoy.